How is it going, everyone? John here. I do videos on investing, and then also I've done 700 short and medium-term vacation rentals, rental transactions. Started to do more content on that, and also introduce some new programs and services related to that. Today we're talking about Roku. I haven't really been doing videos for a while because of this. Really it's been kind of a crazy year with the post-pandemic, the crash of 22, right? But basically, Roku stock has been down, just absolutely, completely hammered. I've actually loved Roku, during 2020 and 2021, even before that, going back to 2017, I've been buying their shares. Fortunately, for me, I really do look at stocks. I don't allow myself to get too in love with a stock. I really, a winner's not a winner till it's a winner, right? And if it's a loser, it is what it is. It's a loser. But basically, specifically with respect to Roku, they're down 93% from their all-time high. But today, here we are, Wednesday, June, whatever it is, I don't know, June 8th. Roku's up 10% on rumors that Netflix might acquire it. So I'm going to take you into a quick video where they talk about it. It's really not extremely substantiated. It just sounds like Netflix isn't really saying anything and Roku's not saying anything. But what's happening is Roku is put into effect some sort of a lockup with their shares. So let's go ahead and take a look and see what they have to say about it.
We're watching right now. Shares of Roku is spiking on speculation. It could see an acquisition from none other than streaming giant Netflix. Business Insider reported internal speculation among Roku employees about a Netflix deal, followed by a halt on employee trading of vested stock options. A trading halt, we should know, could be for any number of reasons. We did reach out to Roku for comment. They did not return our request for comment immediately, but it is likely before business hours. They are on the West Coast. Interesting. Let's push back on this because you have Roku shares down about 93% over the past year. Having talked to Anthony Wood before, that is the Roku founder and CEO, I can't see him selling Roku knowing that his stock is down 93% over the past year. Secondarily, he is familiar with Netflix. Keep in mind, Wood launched internet TV at Netflix, and it was that business, I believe it was in 2007, that ultimately got spun off into Roku. So, of course, he's familiar with Netflix. They work together, but still, I just can't see this happening right now. Netflix has given no indication it would have interest in this company.
But this is exactly what we've been talking about, too. Some of the kind of depressed valuations for shareholders and the moves lower in stock prices, creating an avenue or creating an environment for perhaps some deal making to take place strategically. I'm surprised that years ago Apple didn't go after Roku when they were a $5 billion company, and then even with a premium they could have been a $7.5 billion acquisition. Sure, it would have been the largest that Apple had ever made, but it would have been strategic and ahead of the pandemic. So now if you look at the strategy for Netflix, it's how do we ensure that not only do we own our experience inside of the Roku hub, but how do we also ensure that we own the hub that everybody else has to connect into through some of the other streaming partnerships that Roku already has?
Well, I mean, Reed Hastings has expressed disinterest in owning any kind of hardware in the past, right? Not super recently, but still. And I agree with you, Saz, that if you read this story through, they cite chatter in the company. Yeah. That's like us saying what we think is going to happen with Yahoo Finance and then it being reported as something that will actually happen. Yeah. We can say whatever we want. And then they also cite some unnamed investment bankers who think maybe, they get money when these deals happen. Maybe there's something there, but this actual report doesn't indicate anything real is there. And that's also reflected, by the way, in the action this morning, because whereas the shares earlier were up as much as 8-9%, now they're only up around 4%. So clearly there's a little more close reading now.
Also, too, you have Netflix in cost-cutting mode, really after 2 bad quarters. And by the same extension, Roku has been in the mode of adding a lot of employees over the past year and a half. So if you're Netflix, why are you going to go out and buy a Roku and add even more expenses onto your already high expense base at a time when Roku's growth, top, bottom line, and subscribers and average watch time have been falling off a cliff the past few quarters? Doesn't make sense.
It doesn't at all. I mean, and Roku, the thing that they have done well is be able to just live inside of other hardware and not necessarily have to manufacture all of it themselves.
FlexShares ETFs are built with advanced.
So there is some insight from you from Yahoo Finance on it. Sounds like it's a bunch of rumors, a bunch of talk. The whole concept of deal making does make sense with depressed values, and certainly Netflix wanting to do something really for their shareholders. I don't know though. I mean, it seems like it's hard to imagine that the guy from Roku, Anthony Wood, who actually effectively went and started Roku after working at Netflix, would be agreeing to an acquisition when the stock price is 93% off of its 52-week high, which is just so sad and crazy. I mean, fortunately I'm glad I didn't overexpose myself too much, because again, a winner's not a winner until it's a winner. But the reality is if you look at their 52-week high, it's pretty crazy. I mean, I was up as much as 5x, so 500% return, maybe even a little bit more than that if I look at the 52-week high. With Roku, which who knows if we'll ever see that again. Let me know what your thoughts are, everybody. You think this is going to happen? You think this is likely? I think that it sounds more likely than not that it's something that they're talking about, but I think it's more likely than not that something that's not going to happen, especially now. I think maybe down the road, if both of their companies start doing better and their share prices start doing better and their shareholders are happier, maybe it's something that might make sense. What I do know is, according to my research, I do have followed Roku for a long time, and what I can say is that Roku is way further ahead of the game than even Apple and Amazon Fire Stick and even Google with respect to what they're doing. With the way that it technologically integrates to the television and how fast that remote is, and how fast everything moving within Roku really is. It certainly moves faster than any other TV platform, and they're way ahead of everybody else, which I would imagine makes them attractive and appealing, certainly to Netflix. But let me know what your thoughts are, if you have any thoughts, all right? Everybody, I'm going to do doing more videos like this on investing. Like I said, I'm coming out. I've done 700, short and medium-term rentals across many properties here in Southern California. So I'm going to be coming out with more programs and even services related to that. So stay tuned for that. In the meantime, if you have any questions, like I said, put them in the comments area. And thank you very much, everybody. I do have a background in investing, and even though we've been in kind of certainly crazy times for the last 6 months, it does present good times to actually good opportunities, I should say, to actually go in and take some positions in things that you wanted to take positions in, like some really big companies like Facebook, who's 50% off their high, Netflix, if you choose to, who are 70% plus off of their 52-week high, and Roku I'm not even going to talk about, because I'm definitely not going to be taking more Roku, even though apparently ARK Invest picked up a lot more shares, something like 50,000 shares today of Roku, right? But basically, I talk about investing, and I like talking about investing because I got a background in it. My first job out of college was Merrill Lynch, did some investment banking, worked for Sun America here in LA for 3 years, and then also I've been an investor since 1989. I've got about 5 or so 10x to my track record. I can say that I think all of those, some of them, I think 3 of them are still 10x returns, but some of them have come down quite a bit because Tesla was in there. And then Amazon was in there, and then Microsoft actually still is, because they haven't really come down. But Amazon has come down so much that that's no longer a 10x, and then some of the others are actually no longer 10x. But when you look at 52-week highs, I do have 5 or so 10x to my track record, and I love talking about investing. So anyway, hopefully you guys like that, and I'll see you in the next video.